I'm still bullish. I think the setup for next year is very good. I think that we could definitely get another 10, 12% in 2024. Earnings estimates, usually they're too high going out. I think 240 for the S&P might be too low.
Well, what say you?
Yeah, Scott, I heard him saying that earlier, and I think it's a little bit optimistic, frankly. It's amazing to see what happened this year. The S&P 500 now, of course, up about 26%. That's on 0% earnings growth. You think about U.S. tech stocks, which have clearly propelled the market higher this year. Their earnings were up 5%. That's not bad. In fact, it's some of the best earnings we've seen across the globe for equities, but their stocks are up 58%. And now you look into next year, analysts are expecting 12% earnings growth, and that's on top of the multiple expansion that we've already seen. So we came into this year at 16 and a half times forward earnings. We're sitting at about 19 times forward earnings right now, which is sort of the ceiling that we're bumping up against that high from over the summer. So I think there's a lot of optimism that's already baked in the markets. I'm not saying that we can't do okay, we can't chop around here, but we're not starting from a great place.
So you think we pulled a lot forward?
Yeah, absolutely. It's amazing. I think really markets have rallied not only on the Fed pivot, which has been absolutely critical. The Fed's played a huge role in this, especially over the last month or so with this big 360 from Chair Powell. But you've also seen markets rising on the expectation that we're going to see double-digit earnings growth next year. And think about it. We're going to have less fiscal support. We have a much higher cost of capital, and we still have the lagged impact of the Fed moving from essentially the loosest monetary policy we've seen in 4 decades to the tightest over the course of 18 months. We still haven't really seen that bite the economy yet.
Maybe it doesn't bite it to the way that, it traditionally might because of all the stimulus that was in the system to begin with. Inflation's coming down fast enough that the Fed's actually going to be able to cut rates reasonably quickly and head off that at the pass.
Yeah, so that's the narrative now. It's the soft landing narrative, and we've had this incredible fiscal stimulus that's been extended, and it's causing these long and variable lags to be super long and variable, for lack of a better word here. But we still think that higher cost of capital is going to hurt corporate margin. It's going to cause a lot more cracks in the labor market, and we'll have to really see how that plays out. The challenge with that soft landing narrative is that it's already baked into the multiple and it's already baked into the earnings estimates. Again, the point that there's a lot of optimism there. On the bond side, I think there's some more opportunities here as you've actually seen some value created, not the opposite, which is what we've seen on the equity side.
How's it already baked in, though? I mean, the Fed, I know the market anticipates things, but the Fed hasn't even cut once yet. The economy's hanging in there. What makes you think that all of it's already in the market? I think I could easily suggest that it's not.
Well, I just think the idea that earnings have been flat this year. I mean, look at small caps, for example. They're up 18% year to date. We've seen the biggest rally in small cap equities that we've seen in decades over the last couple of months, and their earnings are actually down 17%. This year. So I think we've completely ignored the fundamentals here. And I think fundamentals are simply going to come back into the picture and play a much bigger role. This Fed pivot party is going on and on. We're all still standing around the party. It's late at night. There's a lot of risk happening. High yield bond spreads have collapsed. Bitcoin's rallied. We've seen the VIX at the lowest levels over the course of the year. I'm not saying we can't have a decent year for stocks next year, but we've come a long way really, really quickly on this Fed pivot. And maybe the Fed's not going to cut 6 times next year, and we've got a little bit of a challenge on our hands.
Emily, Happy New Year. We'll talk to you soon.